We are live, ladies and gentlemen of the crypto space. It is Monday, 12 p.m. Eastern Time, July 27th. We are at the end of the month. It is August. Oh my God, what a year. All right, fine. That's big term. What a month. Things are crazy nowadays, and we have to talk because the only way that we come out this the other end in a decent position is to understand what the heck is going on and why it's going on. So today we're going to talk about predominantly Kyber, Bancor, and Ren. These are my three. These are the three that so I follow a lot, and you'll see my tabs that I have up. But these are the three picks that I think are going to appreciate the most when liquidity starts flowing in the opposite direction, out of Ethereum and out of Bitcoin in the coming weeks, if not months. We already had a run, and I'll talk about that in a moment. Hey, 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 what do we got? We got Asleep at the Wheel. I already said what's up to James. Yes. Digibuy just nibbled. My man Sam says, how's it going? I'm okay. Another day. Trying to keep doing what I'm doing. RR in the house. Yes. All right, let's flip it over to the main screen. We got CoinGecko with the fancy super duper list, which has Bitcoin and Ethereum rightfully on top. They are the only ones that are meaningfully ripping. Um, I don't, I don't really, I have questionable feelings and questionable fundamental analysis of the vast majority of the assets in the top of the space. So, I don't know what's going on with Chainlink. Is it really that FUD report? Because that's unfortunate. Um, there's only three oracles in the entire oracle space, and Chainlink was the first out of the gate systemic disruptor, and now they're dealing with this insanity that's going on, and it's unfortunate. So you have Tellor, Tellor Tributes, and Band, which has migrated to Cosmos. So these are the three projects. That's it. That's all there is in the Oracle space. Now, how this is going to unfold in this extremely volatile market, I don't know. I wouldn't. You can't touch this. You can't touch something that's down 16%, especially considering Ethereum ripping 32% and Bitcoin ripping 12. If Bitcoin rips the 10,500 mark, it's gonna do some interesting things. Um, and really, the whole goal of this entire process is to accumulate Bitcoin because Bitcoin is going to rip for the next 2 to 3 years, and then you swap it over to DAI, USDC, GUSD stablecoins. And that's the process. That's the way it works. That's the way we did it in 2017. That's the way we're going to do it this year, 2020. All right, let's keep it going. Stock market's on fire. I mean, it's not up hundreds of percent, but the fact that it's actually up is crazy. It's not it's a ridiculous reality. Oh, let's see if I could clean my camera real quick. Yeah, that's better. Um, so clearly, we're going to see this Thursday. We're going to see another million plus unemployment. And meanwhile, the stock market's ripping higher, 60, 70 points. It's not zero. It's not trivial. This is not nothing. The amount of liquidity that the Fed and the Treasury are pumping into the system is just downright disturbing, and it's keeping the market inflated. So what you're seeing is equities rip. You're seeing gold. These are the COMEX August gold futures at 1934. If 1934 is above all-time high. Now, clearly, this is a futures contract, so it's not spot. So if this futures contract is indicative of where gold is going to be, look, we're in uncharted territory. If gold goes past its all-time high, it's in price discovery mode. And I can tell you from experience, looking at the gold streamers, gold miners, silver streamers, silver miners today, I'm having a ridiculous day on the stock market. Now, I don't own equities other than gold streamers, gold miners, equity streamers, and equity miners, and they're up 10, 15, 20, 30% over the last couple of weeks. So, I never, I always made my gains in crypto. It's interesting that I made my gains in equities with regard to gold and silver. It has nothing to do with this silliness that's going on in the equity space. Absolutely silly. Albeit the commodities play, frankly, uh, the lithium, cobalt, nickel, and graphite companies that I've had for years are finally starting to move. It only took a pandemic and 30 million unemployed for them to start to actually not be down 95%. Let's take a look at the comments real quick. John says Noah for president. What's up, John, my man? I'd love it. Not ready for BTC and Ethereum. Need more time. Yes, I agree. Uh, well, I'll get to those charts. We'll talk. GDP numbers are going to be interesting. Yeah, it's going to be negative. And these boys doing it the Q over Q, which is ridiculous. As Raul says, compared to yearly, as compared to last year, we're down how much? So if you're comparing this quarter compared to last quarter, that gives you no perspective whatsoever. That's the stupidest GDP value I could possibly think of. Gold value stays the same, dollar devalue. So yeah, that's what I got up here. So gold is ripping higher. I mean, this thing is straight up. Gold doesn't do this. And then you look at the dollar. The dollar is obviously under serious pressure. Now, this is obviously counter trend to what Brent Johnson and Raoul Powell, their core thesis. They're dollar bulls. Now, I love their narrative, but frankly, data is everything. And that's what we'll get to when I talk about data and the flow of liquidity in the markets, because this show is supposed to be about Kyber, Bancor, and Ren, and finding a bottom and the flow of liquidity into Bitcoin and Ethereum. And that's why Kyber, Ren, and Bancor are breaking down. So look at this. The DXY. It's the dollar versus, it's a basket of assets, predominantly euros, but anyway. So if you go back to, I got to flip it to the daily. I got to flip it to the weekly. If you go back to here, look at this. 2016, November 2017, and into 2018. So look what happened to the dollar. It was bearish. And that was when Bitcoin ran. So what's the dollar doing now? What do you think Bitcoin's going to do? And crypto in general. So the deal with crypto, it was never correlated to equities. It was always correlated to inverse dollar. That's the bottom line. So what's interesting is we're seeing the equities run because of the liquidity being injected. So we're going to see equities run. We're going to see gold, the metal, silver, the metal, and the miners and the streamers. Paper gold, stay away from GLD. Don't buy any paper. Don't buy those. No one's going to deliver. They're going to run out of gold. The bullion banks are going to realize they're a bunch of assholes. So the dollar's plummeting. Well, not plummeting, but it's declining in relative valuation as compared to other fiat, and that's what this chart represents. But compared to the historical price action of this chart versus crypto, we're going to see the appreciation just alike. And it's just incredible that it coincides with the technological offerings of the space and just the historical precedent set in 2016, 17, and 18. Absolutely incredible, actually, looking at this. So, anyway, DigiByte broke down. Sorry, guys. So it broke back into the symmetrical triangle that it had for a fair amount of time. It's not going to rally right now. And that's what these charts talk about. So let's get into the meat and potatoes of things. I always keep an XRP chart up because this thing is the most bearish chart I've ever seen. So you'll have folks on Twitter that, there's credit where credit is due for Ripple. They're doing a lot of contracts, a lot of questionable contracts, but a lot of contracts, and they're targeting banks. And the technology is fast. Their validator network is small. It's open. Anyone could be a validator. They're not incentivized. So you run a validator, you're not going to make any gains whatsoever. That's not the way it works. And there's trivial deflationary pressures for the asset. I see no fundamental reason for XRP to appreciate at all other than supply and demand. And supply, I don't see much. The demand is not going to come from the general public. The demand would have to come from banks. So the only way XRP ever gets to a decent appreciation is if the banks are purchasing huge quantities of it. We're talking millions, 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 if not billions, billions, billions. Because otherwise, there's a 27% inflation rate and that's just destroys the fundamental reason for its value to appreciate. But now we flip over straight to Kyber. Kyber is not only a deflationary asset, it has an incentivized supply disruption component, which is the Kyber DAO. If you have obviously large players, you have 1 million Kyber, and there's was it 58 million give or take in the DAO. You're going to get a large portion of the epoch rewards that are denominated in Ethereum. And you could also carry influence in the direction that the DAO takes with regard to decisions for the Kyber platform. Now, this is huge. And that means Kyber, at least in my books, is one of the strongest crypto assets in the entire space. Now, this is a fascinating statement considering this chart shows it's tanking. Woo! Let's take a look at the comments real quick because I just said it's tanking. Michael's in the house. Yes. Gold values, it stays the same. Yep. Captain Weber in the house. Always a pleasure. Do you see gold, silver breaking to the downside? No. On the contrary. Gold and silver are rallying firmly to the upside. Ferociously to the upside. This is ferocious. We're at all-time highs. Gold and silver. Are you saying the gold and silver ratio? Well, I see silver going up, so that means the gold and silver ratio is going to crash at some point, or at least it is crashing. I don't have it up at the moment. Can operating Lightning nodes make profit? Not at the transaction volume. No, not currently. All right, back to content. So Kyber's fallen off a cliff. Now, I've been following this chart for a while, and I've had this up. I've showed this to you guys since mid-July, early July. I've had this up for all this time. The time to get out was when it broke trend, and that's the whole point of local trends. So let's pull up the 30-minute. I'll kind of highlight where I got out. I'm pretty sure I got out right about here, first dip, and then it keeps running. You can't be in something like this. Something that breaks local trend formation, you can't be in. And the same thing, unfortunately, happened with Bancor. So this was actually even a longer trend formation. Flip to the hourly. So this is a trend formation starting back in May. Two and change months, but it broke to the downside of the ascending channel. So I was out early here. I was out about here. And I saved all this. So you cannot do anything with these types of charts until you see a good correlation between multiple charts indicating that there's a trend shift across the board, because all the altcoins run together. And none of the altcoins are going to run really unless Bitcoin starts to stabilize. Now, bear in mind, we had this massive altcoin run because Bitcoin was traveling horizontally in the 9,200, 9,300 range for all that time. Did you better just nibble? Just bought some more. Listen, but this is where dollar cost averaging comes in. You get 100 Kyber, 200, 300, and you dollar cost average, and that's the game to play for myself. That's not something I'm doing at the moment. I'm in Bitcoin and Ethereum. Bear in mind, I do have my core position, my long position, Bancor and Kyber, that I hold. I bought these things back at like 50 cents a pop. So these things are still way in profit. And that's a big thing to consider. They've run a lot, and this is still up huge. Now look at it. Interesting. Look where it's bouncing. It's bouncing on meaningful support. Anyway, Bitcoin taking all the alts down. Yes, and that's not a bad thing. That just means you have to follow the charts. If you were out here when the local trend formation broke, where's Bancor? If you were out here when the local trend formation broke, and if you're out of my other big play is Ren. If you were out here when the ascending channel broke, which was a good time to get out, but then again you did have a descending triangle, so you could have waited to here and you still would have saved a fair amount of losses. So bear in mind, for myself, Ren is not a get out possibility, I have no capacity to exit my position. I operate 3 dark nodes, so it's not even a thought in my mind. This is something that was acquired at about where did I get in? I think I got it in at about 800 here. So I was in at about here. 3 dark nodes at about 800 give or take. 800 sats. So it's still substantially in the green, and it's not something that you can't liquidate a dark node. You have to unbond, which takes 2 months, and then to sell. And by the time you're in a position to sell, set it and forget it. And that's the way you got to run dark nodes. But bear in mind, if you run a dark node, it can't be the entirety of your portfolio. You really want 5%, maybe 10% of your portfolio, because there's a lot of assets out there, so you have to be meaningfully diversified. You have to have proper position sizing. For instance, Kyber and Bancor gave a good run for me. It was about 300% gains. As I saw the trend formation break, 1, 2, I exited everything other than my core position and moved it into Ethereum. And then Ethereum broke. It gave about 30% rip. So I moved a little bit, about 2 Bitcoin, about 2 Bitcoin worth into real Bitcoin. And how do you do that? You're going to use Ren. You use the Ren bridge. You go on 1-inch exchange, you take Ethereum, you convert it to WBTC, you go to the WBTC cafe, and you convert it to Bitcoin. That's what Ren is for, man. This is some next level type stuff that's really getting built right before our eyes. Hey, man, is it still early to speculate an ROI between income streams, Ren, Kyber, BNT? Yeah. What's pertinent with regard to the assets is the fundamentals, meaning yes, you can have a recurring revenue stream with Kyber and as well as Ren. Not necessarily with Bancor, other than being offering liquidity, which is BNT is going to be a strong component of the liquidity process because of the V2 protocol. But they're extremely volatile assets. Now, I think with regard to long-term recurring revenue streams, specifically regarding these 3 assets, it's going to take some time for the volatility to stabilize, but it will. And there's 2 things that you look for to turn these into recurring revenue streams: the volatility to stabilize, and 2, you've made so much money that it doesn't matter if you got 10,000 Kyber and it drops in value 50%, you're still getting your Ethereum on a monthly basis, your epoch basis. It's kind of the same thing with REITs. As the principal goes down, you're getting more dividends, and that's really all you care about. You have no intention of liquidating the principal. What you care about is the monthly recurring revenue stream, and that's something that is quite quickly becoming possible with the crypto space. Now, the problem with REITs is I don't trust the equities market at all, because it's all working on funny money, as George Gammon so eloquently says, working on funny money. So I don't trust it. But that I want to acquire assets where I could forget about the principal and have an annuity, a recurring revenue stream that gives me constant income, where money works for me instead of me working for money. Talk about what a VM is and does. Well, a Ren VM is a software deploy. I deploy to Amazon. Some people deploy to DigitalOcean. It's a software deploy that handles handles the encryption and management of messages, and it's able to break down information in a message and spread it out across a network of dark nodes, such that no individual dark node can access the contents of the message. And basically, what is the message in the instance of its first use case is the management of UTXO private keys. So the dark node network has control of UTXO private keys. No individual dark node has a capacity to view, by itself, the UTXO private key. It needs the network. It needs confirmation. It needs consensus. And that's what it does. So transactions go in, you have a mint. The person who deposited the UTXO private keys receives a mint signature back, is able to mint REN assets, a one-to-one representation of the UTXO assets they deposited. And the contrary, when you deposit the REN assets, you're destroying the REN assets, releasing the decentrally controlled private keys, and you're receiving output in the form of the asset which you burned. I know, it's a lot of words. Suffice it to say, REN facilitates a one-to-one representation of assets on two different chains, a tokenized representation of the asset. And I mean, REN is straight up gonna work across all UTXOs, Ethereum, Polkadot, and there's no reason they're not going to support Cosmos in time. But Polkadot is developer fire right now. And Polkadot is likely going to have a little bit more of cross-chain interactivity between Ethereum and the UTXOs sooner than Cosmos. But I cannot neglect Cosmos because of the BSN and China. Whatever's big in the West here is just as important as what's big in the East. And China's all in on the BSN. And Cosmos and IrisNet is one of the 6 chains that are the target of the BSN currently. And Ethereum is one of them. And the other ones are Neo and, was it Cardano? I don't know. Who cares about the other ones? EOS. No. I have absolutely zero interest in a network that does not have a critical mass of people contributing to the security consensus, the security mechanism. Now, even if it's a bit centralized, like what occurs with Bitcoin, you still have a huge amount you have the potential for geographically diverse contribution to security, and that's what I think is most valuable, and look, and then it could potentially do what the best implementation, which is Digibyte. Digibyte has the most geographically diverse contributors to the security mechanism of all UTXO blockchains. Incredible, right? Always great tweet and info, my man. Appreciate that, Hawk. Got me interested in KNC, not doing well. Yeah, but that's irrelevant. KNC is something you have to keep an eye on. Kyber Netowkr might be the most important asset in the entire crypto space with regard to its deflationary monetary property and its incentivized supply disruption mechanism. This is not something to buy right now. I have liquidated 75%. I still have a fair amount, but I have all those gains. So the reason I hold it is because you never sell your whole bag. You never do. That's just the way, that's a rule of thumb. But you don't buy that. Anyone who's watching this now, do not buy this right now. You have to wait. And you have to pull up this chart. You go to tradingview.com, you type in KNC BTC, and what you have to do is exactly what I do. You got to wait for this stuff to bottom. And it's not even just bottom. You got to wait for a trend formation. Otherwise, you can't make a decision. So look, if this bottoms here and that pops 20%. Yeah, you missed out on 20%, but then it drops 10% and it pops 20%. So you probably missed out on 30% gains, but no, that's what you have to do because you can't make a rational, logical decision unless you have minimized risk. And you have minimized your risk if you've assessed a trend formation. What you want is triangles, ascending, descending, or symmetric triangles. You want wedges. Ooh, dare this turn into a falling wedge? Falling wedge is always a buy. And we're clearly not on the defensive here. It's not like we're going to have a rising wedge. We're falling. So you're looking for a bottom at this point. You don't do anything until you have a clearly defined bottom, and that's how you protect your gains and you don't lose more. Do not buy now. Jesus. It's the same thing with Bancor. I love Bancor. Bancor is just, what they're doing with V2 is going to be a systemic disruption. Yeah, no. No. Look at the volatility in it. You can't touch this right now. This thing was so stable for a fair amount of time. You have to wait. You have to wait for a clear trend formation. I mean, this has a bit of a triangle factor it has a fair amount of pressure to the downside, but I wouldn't touch this right now. There's too much volatility. And to top it off, you have to wait for Bitcoin and Ethereum to calm down a bit, in my opinion. Anyway, let's see. How long do you expect these revenue streams to continue before being disrupted themselves? It doesn't. That's not an assessment to make. What you have to do is watch the data. You acquire revenue streams. You watch the data. You look for systemic disruption. You're constantly managing your money, and that's the whole point. Your money's working for you, so you got to manage your money just like a boss. That's this whole game. So you're moving equity, you're moving liquidity from one pool to another. You may be a carry trade, so you're borrowing, but you're also lending, earning more interest from lending than what you're borrowing at, and that's a carry trade. And this is done for the history of the equities markets and the global finance. And now you can actually do it in crypto land. Um, so you're always moving money around to maximize your gains and minimize your risk and losses. That's what you're either actively managing your portfolio or passively hoping that you're not losing value. Protect your gains. If you got out, I got out early. If I got out here and it shot up 20%, that would have been the right decision. So say that again. If I got out here, see where that mouse is? And it shot up 20%. I got out. It was the right decision. So you follow the data. Protect your gains. Work too hard for this shit. Alt season taking a long break. Well, we've had a couple of months. I mean, Bancor is a great example of the time duration that we were in this current trend. This thing's been ripping since May 16th. May, June. So 2 months. Over 2 months. Well, 2 months, give or take, because this has been bearish for about a week or two at this point. So 2 months we were ripping higher, but you could only rip higher if there's no other better investment, and that better investment has quickly become Bitcoin and Ethereum. Bitcoin is at 10,421. This thing goes past 10,500. It's going to be one hell of a rip. Yeah, you start seeing those $1,000 swings like we used to see back in 2017 and 18. I watch Ethereum die because if I get tempted enough, I'll go on DYDX and pop a trade in, but that's how I lose. So I probably shouldn't even watch this. I probably should just watch Ethereum USD. But suffice it to say, where it was at 314. I mean, I have an equal amount of Bitcoin and Ethereum. Not quantity of Bitcoin and Ethereum value, like US dollar value. I just think both of them have so much potential. Polkadot and Cosmos are not going to disrupt Ethereum. This is going to be a serious infrastructure that's literally being built out before your eyes. The functional use case for Cosmos and the hubs and the chains and the parachains on Polkadot and literally just Ethereum because of all the developer activity. It has so many years of momentum behind it and corporate development and corporate infrastructure that's been built. It's just incredible what has been built, what is being built, and what's going to play out for those three ecosystem projects. And guess what? The history of UTXO folds right into all this. And there's a huge amount of equity and utility into UTXO assets. And as I always tell everyone, my focus is probably Digibyte, Blocknet, StakeNet, and a couple of others. Syscoin. Oh my God. Syscoin actually gets really, really darn close to the DeFi narrative from a UTXO perspective, including a second layer solution for Ethereum. Syscoin is a big deal. Obviously, it ripped big to the upside. So there was a falling wedge here, which broke to the upside. You know what? You could probably... This might be a big falling wedge, or maybe it's just a descending channel. I don't know. I'm not looking at really anything other than Bitcoin and Ethereum for a period of time. Watch the data. That's what matters. All right. This was a good one. Let me make sure I hit on the topics I wanted to. Yeah, the market shift. So the market shifted away from the altcoins. Watch for the trends, watch for the breaks in the local trend formations. Look at reserve rates. It's a break to the downside. This is where you exit, ladies and gentlemen. You exit. Not because you hope or the narrative that reserve rights is going to fix stablecoin and currencies in Argentina and Venezuela. No, the narrative is incredible. But you don't want to lose 20% just because you don't want to sell it. So you get rid of it. But don't get rid of the whole thing. You get rid of 90% of it, 95% of it if you want to be extra conservative. Still have 5,000 Kyber sitting in the Dow. But this the narrative for Kyber is incredible, and this chart is frankly beautiful. You just got to wait for a new local trend formation. This was actually gorgeous when this was playing out. A descending channel, which is really a bull flag, which broke out. It did break out, but it revealed a small symmetric triangle, which broke to the downside, revealing the larger symmetric triangle. And that's the story for Kyber. I look forward to these markets stabilizing. You're going to have to watch the Bitcoin and Ethereum markets. So the combination of the Bitcoin and Ethereum markets, and you'll see the altcoin markets stabilize. That's what you'll see. You'll see a bottom formation for reserve rights, for Bancor, for Kyber, for Ren. You'll start to see that bottoming formation and a new local trend, and that's when you know that you could start moving money back over. All right, 12:31 on a Monday, everyone. Always a pleasure. I'm going to get some topics and ideas together. We'll talk about it tomorrow. Hit me up on Twitter. It's always a good time to chat and the best part of my day. Thank you, everyone, for joining. Always a pleasure. Talk to you tomorrow. Peace.